Hey guys and girls, welcome to this week's episode of the B.Invested Birchy podcast. I'm your host, Nathan Birch. This is a show unraveling the truth to the facade of the 21st century. We're now exiting the matrix and waking up to motherfucking reality. Today, I want to talk about property markets and certain things out there. I was talking to someone today that asked me a question, and I said, I'm going to film a podcast this afternoon, and I'm going to deep and dive into that and answer the question for you onto that podcast. So you know who asked this question, and you know you listen to the podcast, so this is for you. So the question was about property markets. Quite often I'll say, hey, I bought a property for 200 grand and some idiot paid 300 grand 10 years ago on the property. So we're buying it cheaper than that market and all that sort of stuff. Question that she asked was, A, will that property market go back up? And B, is there other markets which will go back down? And it actually set a train of thought off in my head about something else that I'm seeing out there as an alert. This is a watch out, buyer beware. There is issues out there in the market, and I want to share with you where I see some of these issues. So I like buying in depressed markets, right? And the reason why I like these depressed markets is because I don't have the same competition that would be out there elsewhere. Markets don't stay low forever, and who wants to buy when something's expensive anyway, right? So if we go back, say 5 years ago, I was buying in the Gold Coast for like 150, 200 grand, and now those things are worth 600 grand, right? That market in the Gold Coast, when I was buying 200 grand, was selling 5 years, 10 years prior for 300 grand. So the market hit a point, it was oversold, all these FOMO and people fear of missing out. They jumped into the market, they started paying stupid prices, bang, 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 bang. And the market hit a peak. Basically, when markets take off and they go in a heated market environment, it's because there's a lack of stock, right? And then people put market prices on and they're like, oh, I'm going to get involved in this and pay a price, right? And then new stock comes in the market and then there's not enough demand for the same amount of supply that's coming in the market. It hits a peak and then it comes back down a little bit. And that's the point where I don't want to be playing at the top of the market. You know, I was the number one buy in Queensland, Southeast Corridor. I was buying 50 properties a month for maybe 7-8 years, month in, month out, just in that one market. And those things everyone bought, done fantastic, but I don't buy them at 600,000 anymore because the value isn't there. I might buy one or two where there's intrinsic value there, but I'd rather be buying in more depressed markets. So looking at that, if we take a time, like people forget things very easy, right? Like I've got a fucking tremendous memory, right? I take good pride on the fact that my memory is so strong. I can tell you what happened street by street in 2003 in certain markets in Sydney. This is before like RP data was even a thing. I think it was called realtor.com, right? It was way back before CoreLogic. Was RP data, and then RP data was realtor.com, I think it was called, many years ago. It was like a very basic database thing. So I know the data that's out there, and I've seen these markets go many times over 21 years. So do these markets catch back up? So if we go back to when I first started investing, I was buying little cheapies in Western Sydney and Mount Druitt. They were selling at about like 2001, 2002. The market heated up. You can buy a property at the peak. When I first bought my first property, it was a peak of the market. And I bought well, but there was markets where I bought a non-housing commission house in a private area for 260 something. I ended up getting it cheaper because of termites and got it for 248. And then all these house commission houses that were not as good were like 300 grand. So initially on my first one, I bought it below market value. But all these properties that were 300,000 around Mount Druitt, 2770, Wayland, Tregear, Shalvey, whatever. Between 2003 and 2007, when the GFC hit, that market went from 300,000 back down to 200,000, right? And at the time, everyone said that market was dog shit. And I saw the value because the infrastructure was around, migration that was happening, intrinsic value, right? You're getting a house on land, right? And everyone thought it was stupid. Like, why would you buy these things for 200 grand? That's why they were 200 grand at the time, and they're not $1 million like they are today. But, that market went backwards to about 2007, 2008, GFC hit, interest rates dropped, and then property prices went nuts, right? Because that market was not a good market at the time and it turned good. Rents rose, and they were very heavily positive cash flow. They weren't positive cash flow when I was buying in 2003, 4, 5, 6, and 7. They're actually heavily negative geared. But that's all I knew because I didn't, I wasn't in every single market. I didn't have all that data in my head that I'd built over the last 20 years. And then look at that market from 2009 to 2011, the market caught back up to like 300 grand to where it was, right? And then from 2011 to 2016, 17, the market doubled and went up to like 600 grand. And then the market got a bit stagnant, and then it came backwards from about 2016, 17 to about 2020, just before Corona. And the market came back a little bit. Corona came, you had an event which happened, we had interest rates drop, we had stimulus package put in the market. Those things are now 800-900 grand for the same sort of properties, right? Fucking insane if you ask me, but that's the demise of our currency, and we won't go there because we're talking about property today. Looking at other markets, if we look at Perth, right? Perth in 2010-11 took off and then had a lost decade, right? I remember talking to people on map sessions going back 6-7 years ago where they bought a property and they paid like 500 grand in Perth and it was only worth 260 grand, 300 grand. Their income couldn't support it. The rents had gone backwards. Now, if we look at Perth, I was buying in Perth, 5-6 years ago, and I was paying like 100 grand for a unit in Perth City. I was paying, 200 grand for a house in Armidale and those, not so good suburbs. And now are worth like 500 grand each. Everything's worth 500 grand, whether it be a little unit in Perth, whatever. But these markets, they change. You have ups and downs. So within saying that, if we look at Sydney today, there's still markets in Sydney where I can buy a property cheaper in 2024 than what it was selling in 2016. It's just that market segment and that specific location in the market hasn't taken off, and the market went backwards. And over that 6-7 years, 8 years that have gone by, rents have increased, inflation's increased, the cost of buildings increased, and the value is so far intrinsic value. So I'm not going to go into specifics of where I've bought, where I'm going next, right? Because I move in a nighttime manner, right? I go in and I just wipe out things in the dark of the night, and you're like, wow, what happened in that market, right? So there's markets, and I see that there's very good markets out there today that have the attributes that other markets that have gone by have shown and have performed very, very well. But my point being across all of this, and to get to the initial question that was asked, is do these markets take back off? Well, the Gold Coast, that was 250 that went to 150 to 200. We picked up for 200, 150, went to 300. Now it's at 600. Like that could have tripled or quadrupled in a period of 3 or 4 years, right? But you need to build that portfolio up. Am I out there buying something at the top of the market? Absolutely fucking not, right? That's my advice, right? And when I got asked this question of the markets recovering, right, I look at whether it's Gold Coast, Brisbane, Perth, right? Everyone's obsessed with some of these markets, right? And they're paying stupid money, right? And it's scary, right? This is the buyer beware out there that I want to share with you, because I've seen this for 21 years as an investor. Time's gone by where there wasn't videos. Before there was all these spruikers in your feed while you're doom scrolling through your, we've got data analytics to teach you how to get this. I've seen these markets, right? You'd either follow it and hear my advice, or just go on and go, getting on the hottest trend and hotspot things, right? If the data is published, the market's already moved, right? It's important to understand the markets, have your finger on the pulse, know what's going on, industry, infrastructure, migration, right? I'm going to share it with you now, right? I've never shared this with anyone in public space before this video. I don't believe I have. I've shared it with my investors because that's my intellectual property of what I share as a buyer's agent to people. In 2019, they changed migration laws in Gold Coast and Perth, and if you're a doctor, I think I shared it maybe 2 weeks ago or something on another podcast, right? Migration laws, just one little thing, right? Boom, people come there, right? So if you're a doctor in India, and you come to Australia, you're no longer a doctor anymore, right? But if you go to a specific region that's allowing of people to keep that, and you work there for 10 years, you become a doctor, right? So that causes a lot of migration. And they go through times where if you've got a market which is depressed, they will open up for migration to go to these locations for skilled migrants to come and work in those areas, right? So you see these things, this data comes out, right? And I can see before the data comes, before those sort of policies change, right? The little policies within Parliament, right? And you go, okay, well, that lever gets shifted, bang, something's going to happen, right? And these things are happening out there. People aren't talking about it. People don't know about it. People don't know where to look for this stuff, right? So there's lots of things that come to play, right? We look at Cairns and Townsville, those things. I was buying in Cairns at $20,000 a piece, and you guys, maybe not you watching this, but I know there's people that writing the comments, oh, why would you buy that piece of shit for $20,000? Well, those things are now worth $200,000, so you 10x your money, right? We're buying in these markets before they took off and gone crazy. There's so many of you that are bought in Cairns for 80 grand, 100 grand, 120 grand. They're now worth 400 grand for those same properties. These have been decades, right? I remember in 2010, 2012, when the market in Cairns dropped from 400 grand to 80 grand, right? I've seen it. It's happened. It could happen, right? I'm not saying it will happen. I'm not saying that any market's bad or any market's good. There is some really fucking hot buys out there and some markets which have not been touched, thought of, and they're covered in fucking dust. It's like a 1970 Holden that's come out and sit in someone's garage. There's markets that are like that out there still that have massive, massive upside. So I guess my point of this podcast and video is to talk about these markets go through cycles and waves and cycles. There's things that can impact them on a good way and some things that impact on a negative way. Don't be fooled. Don't just be looking in one neighbourhood or one location in the country. Go where the opportunities lay, and find those opportunities and capitalise on those opportunities. And that's probably my first thing to say. And second thing is, if these markets, someone paid something more in the past, if some idiot paid 300 grand and I'm paying it for 200 grand, I just need to wait for that idiot to come back just to pay 300 grand again because someone paid it, right? And if you can buy when the markets are depressed, not only do they go back from 200 back to 300 grand, well, the whole market's moved. Inflation's happened, lives happen, buildings happen, migrations happen, lots of things that have happened. That 200 grand is like an elastic band that's pulled back so far, there's a pent up demand, right? So let's look at it this way. This is the nail on the head here, right? At 300 grand in the market goes to 200 grand in the market. Something happens there, right? 10 years is a lost market, right? You've got less construction because if someone has to build a new property, it's going to cost 500 grand to build that property now, right? So there's lack of construction happening. That's what's happened in Cairns and Townsville and these sort of locations. They haven't been building, right? The market's been too shit to build, but you've still had the same level of migration, right? And I'm talking overseas migration, or I'm talking like interstate migration, right? Everyone moving from Melbourne to Gold Coast or whatever, right? And people from the Gold Coast are like, fuck, if we just travel another 5 hours, 10 hours, 20 hours up the road, I can find somewhere just as nice for a quarter of the price here, right? So people are migrating. Supply is lacked and demand is strong, but now they have to play catch up for all that, lack of construction that has happened because it's not profitable to be building, right? So there's lack of development happening there, which really adds fuel to the fire. So when they start, pumping out lots of developments in these locations and people pay too much and it becomes more profitable, then that next boom cycle happens. But you want to get in just before the boom happens. You need to know how to read all that, that data out there, I guess. So look at that and be mindful, guys and girls. This is a market which, I see that there's people going to get burnt out there by buying stupid properties, right? There's so many opportunities. We live in a country where it's like fucking massive. It's bigger than the size of America. We've got, measly 25 million people, right? You go to most countries around the world and you see the whole country of what we've got here in our land mass stuck in the space of half the size of Sydney, right? So we have a lot of opportunity. We've got a lot of growth potential ahead of us as a nation. I love when I see migration figures coming through and I see housing supply shortages, and I've probably got a whole pile of purple-haired, fringe-shaved people that are protesting about the fact that what's coming out of my mouth at the moment. That's perfectly fine as well. But, there's a lot of upside here in this country. We've got a lot of pockets to capitalise on. I just see people getting caught up in hype and the next hottest doodad and fad, and it's best to buy in Perth or Gold Coast or whatever, right? I've got a massive office in the Gold Coast. I've got the largest management firm in the southeast Queensland up there, right? But I ain't buying stuff there because I don't see the value there, right? I actually do sales from my office now up there. I've got salespeople to get the highest prices when we sell the properties, just because I see that the market, it's probably, I'm not a fan of selling, but if someone's going to sell, it's like, okay, well, that makes sense to sell that thing because it's a stupidly hot market. Don't get caught up in a stupidly hot market, because you'll be a statistic and I'll be buying your shit off you in 5 years' time when you go, oh shit, I stuffed up here. I've got to sell it in a more suppressed market. So be cautious, be mindful, be strategic, and make the right moves on your journey as an investor. So if you need help with identifying those markets or finding those deals, whatever, you know where to find us. Hit us up. I'm your buyer's agent. I've been here for 15 years doing this stuff before any of these other people out there in the industry started being buyer's agents. So hit us up, 1300 367 925. Email us, admin@binvested.com.au. Make sure you share this video, like the video, get it out there, because sometimes I do say controversial things that does get shadow banned. So I appreciate all your help on pushing the content out there. You can find us on Google Play, Apple Play, Spotify, and YouTube. I'll see you next Thursday. Have a great week. Bye.
Like Bilal said, man, we're stuck in the matrix. This my advice, don't care if you take it. The dollar back to die, soon to be hyperinflated.